did you have friends in Lakeland, Florida, or anything like that? Because even that's one of the issues that I'm having. Like I own a lot of, or not a lot. I owned 57 units in Southern California. It's about $12 million worth of real estate. Eventually, I want to go out of state, but part of it is like, where do I go? And I know that it has to do with population growth, and I know it has to do with job growth as well too. And what you're saying is making sense about avoiding some of the larger markets where you're competing against big time players. Like what made Lakeland, Florida, like, or how did you end up there? Like, did you start off with a larger list? Did you look at rents? Did you look at prices? Is there
It's a good
anything else that
question.
you looked at?
Yeah, I looked at a lot of the cities in Florida, and I asked myself, all right, who because you're right, it's everything becomes so much easier if you know people that are there,
Yeah.
especially people in real estate that are there that are familiar with the market. So for me, I was looking at some of the coastal cities up in between Jacksonville and Fort Lauderdale. And there was a few cities there that were pretty competitive, like West Palm Beach, Daytona Beach, which we're actually doing a deal in Daytona Beach right now. But I was looking in those markets because they had the good demographics. The price points were very similar to what I was familiar with up in New Hampshire. So I was like, it's not a big learning curve.
Mhm.
But I didn't know anyone there, so it was really challenging to get familiar and to feel comfortable. So what I did was I joined a lot of networking groups that I knew had a lot of folks in Florida within the groups. So I met a couple of guys that lived in Tampa through one of these groups, and again, Lakeland's about 40 minutes outside of Tampa. They owned some property in some cities that bordered Lakeland. They didn't have anything in Lakeland yet, but had some in surrounding areas. And I basically said, hey, I'm going to go hunting for deals. If I find something, I'd love to partner with you guys. Maybe you guys can help with the asset management, kind of spearhead the boots on the ground stuff. I'll help put together the money, and we'll slice the deal up according to what makes everybody happy. So those first two deals, that's what I did. I partnered with those guys, and a lot of limited partners, and we raised capital from investors. But they've been extremely helpful in the asset management of the property. So,
Mhm.
checking on the property every couple of weeks, holding the property management company accountable, keeping the pulse on the local market a little bit more so than what I'm able to do from afar. So that was helpful. Although at the same time, that just made me feel comfortable, right? I probably could have done those deals from afar and still
Mhm.
been, they still would have went okay, but it made the decision a lot easier and made me feel a lot more comfortable putting money to work when I knew I had people down there that were close. So I think what you've described is really important. I think people get so hung up on the metrics, like the numbers, right? And at some point, you're just going to be in an area that's growing, right?
Mhm.
South Carolina is just growing as a state. Florida as a state is growing. Texas, Arizona, all these places are just growing. So you're going to be fine no matter where you're at in the state, most likely. And then, yeah, you want to make sure you're not buying in a really bad neighborhood. So
Mhm.
you do your due diligence at that level, and connecting with local agents, local property managers can help you vet that. Um, and then after you close a deal, yeah, it becomes a lot easier if you have a really, really good property management company or a partner down there that can just help you manage whatever management company you're working with. So I do think it's good to almost work backwards from where people if you just want to gain traction pretty quickly.